My name is Ryan Miller, and I've spent the last 15 years helping hundreds of people just like you to raise millions of dollars for their funds and for their startups. I am on a mission to help investors and founders to create new jobs, extreme wealth, and the dream life they deserve. Join me as we peel back the curtains and explore fresh ideas and dynamic personalities as we all move toward our dreams of making billions. Let's get into it. In this week's episode, I bring on my friend Anthony Calpas. Anthony and I skip past all the hype and go right deep into a master level analysis on crypto infrastructure that can make you massive profits. You don't want to miss it. Plus, Anthony shares with us the 6 areas that professionals invest in that are actually driving value in this space. And he tells us where he believes the next wave of billions will be made so that you too can get one step closer to making billions. Here we go. Hey, welcome to another episode of Making Billions. I'm your host, Ryan Miller, and today we brought back one of my very best friends, Anthony Calpas. Anthony is a managing director of Karukera Capital. See, Anthony, I said it right. Sometimes I totally mashed the name of your fund, but this fund, they focus on crypto and layer 1 protocols. We'll get into exactly what that is. So today's episode, we're going to talk about exactly what is crypto, but more importantly, where are billions being made? So today, Anthony's going to walk us through and give us a very special treat to have a brilliant mind like himself. If you haven't heard the first episode where Anthony talks about the metaverse, I would suggest start there where you get to know Anthony a little bit more. And then come back to here. But for those of you who are just starting here, welcome. Anthony, welcome to the show.
Thank you very much, Ryan. Thank you. It's a pleasure to be here.
Yeah, it's a pleasure to have you and your brilliant mind. Really looking forward to getting into crypto and rounding out that 2-part series that we have. So in true form, why don't just give us a quick 60 seconds. Where did you start early in your career? And how the heck did you end up from where you were to running your own we won't say venture fund, but more crypto fund.
Sure.
Walk us through that.
Sure. So basically, I graduated in software engineering and in cryptography. And after graduating, I enrolled in the army, in the French Navy, actually. So I was an officer there. Yeah. And at the same time, I was also an aerospace engineer. So basically, when I wasn't being deployed abroad, I was back in France working as an aerospace engineer on defense systems like missiles, nukes, drones, and so on. But yeah, it sounds crazy.
So right? Cool, yeah.
But I was doing it from a software expertise standpoint, software and cryptographic expertise. So with my expertise, I then heard about cryptocurrencies toward 2016, 2017, and I was curious about it. So I approached cryptocurrencies through from a very scientific point of view first, because I was an engineer and I'm an engineer, so I have a scientific mind. So I wanted to understand very thoroughly what is underlying the technology and the trend. And more people were asking me how it works, to break it down for them. At the same time, I started with investing with my own money. I did quite well. And after a while, it just made sense for me to create a fund because cryptocurrencies are here to stay. And it's a revolutionary technology. So yeah, I really believe in it. And I propose my expertise to our investors, basically.
Awesome. Yeah. And so here we are. You go from the French Navy specializing in software engineering, aerospace engineering, working on nukes. I mean, we could have a whole show on that. That's amazing. And I know you go further in the previous episode, you go further into how you were fighting pirates. We won't spoil it here, but that's why I said maybe you start on the first episode. Oh my gosh, this is the coolest thing. So here you are. You're standing up Karukera Capital. Walk us through. So for myself included, I remember asking you, what's with the name? what does it mean? Like, describe it. How does that fit into investors?
Yes. Sure. Short story about the name. Karukera means it's actually the name of the island I'm from originally. So I'm French, but France has a lot of territories all over the world, and one of them is called Guadeloupe as of today. But before being called Guadeloupe, it was named Karukera. hence the name of my fund.
Awesome.
So yeah, this fund is about investing in crypto assets. And this being said, unlike a lot of funds, we are not doing any trading activities. What we do is we are investing in the infrastructures that are underlying the crypto and decentralized networks, basically. So it's a very niche market, but it is so central, and we'll get a bit more into it later on. But it's the kind of central position you want to be in, basically.
Yeah, and so every other, I'm doing air quotes for those of you listening, the experts that I've talked to, I bring up something a little bit about your strategy without revealing it, and every one of them was like, "Oh yeah, that you've got to be the real deal to be able to understand that world." So these experts, without telling them who you are and what you do, they're like, yeah, if you know someone that can do what you're saying, then you latch on to that guy. So
because what
you do is very unique and highly profitable from what you're telling me. But we'll get into all of that.
Absolutely.
So very impressive strategy. So really quick, most people at this point, I would argue, kind of have a sense of what crypto is. So I don't want to spend too much time into the basics. Maybe just in 60 seconds, you can just walk us through really quick. What is crypto in 60 seconds?
Sure.
What is it?
Sure. So the one thing to keep in mind is that crypto is a technology, basically.
Yeah.
So what kind of technology it is? It is a distributed ledger. And this ledger can be public, it can be private, but either way, it is distributed across many devices, many computers, and data centers, and so on. And basically, what we call cryptocurrencies is that branch of software engineering that consists of, making those interactions between those devices holding the same ledger doable and doable in a safe manner and at scale, of course, so that the whole network of those various devices holding that distributed ledger can provide a service, a particular service. I'm going to give you a very simple example. When we say crypto, people go like, oh, Bitcoin, or oh, DeFi, or maybe oh, Ethereum, right? And these are great. I mean, I love them all. But I'm gonna give you an example that is not related to Bitcoin or DeFi or Ethereum. To give your audience an idea of how cryptocurrencies can achieve so much more, actually.
Sure.
So let's say that you have 200 gigs available on your hard drive, right? You have a MacBook Pro, you bought it recently, and you have plenty of space available on your hard drive. So like instead of having this free space unused, you could make this storage space available to a decentralized network so that people can store their pictures or videos from their holidays in the Caribbean, for instance.
Yeah.
So, and without being worried that you will go into their picture or videos or whatever, because those things will be encrypted. And yourself, with your own computer, you will not have access to those files. And if you try to do so, you will be banned from the network. And why would you do that, right? Well, simply because by doing this, you will be paid into the tokens of the network that is providing this service. So you can see it as some kind of like Dropbox, decentralized Dropbox, basically, or decentralized iCloud, where anyone like you and I, like anyone in your community, can basically make their computers and their hard drives available for anyone else to store online their pictures and whatever they want to store in a safe and untampered manner. So I love it. It's basically this technology is crazy because it brings the ability of decentralization and disintermediation. So it removes this element of trust, basically.
So many new business models. So in that case, a ton of new business models and businesses are coming from that. So a lot of people, they see crypto, and you hear, recently NFTs. There's a lot of stuff that's being thrown around, and I know we went into that in our previous episode. So one of the benefits, based on what you're saying, that I can see in the finance world, one of the elements of risk that we look at is counterparty risk, which essentially says, hey, like, we're doing business with somebody, we're doing something, we're transacting and transferring value between two people. counterparty is the person I'm doing business with. And there's always a risk that they don't do what they say, or they, for whatever reason, it doesn't work out due to some missteps on their end. And what I think
Mhm.
you're hearing through being banned from the network and all that in that example is you're saying, or at least I'm hearing it through my lens, is saying, hey, this is a really good tool to help mitigate counterparty risk. It ensures for both sides. So it ensures that both people do what they say, or value cannot be transferred. Would you agree that's a fair assessment?
Absolutely, absolutely.
Awesome.
Yes, the counterparty risk is a nice way to put it, basically. And so basically, the technology itself brings the service, and the value is transferred or transacted through the tokens, basically. And thanks to like those native tokens, you can access those networks and services that are being delivered. Definitely, without this element of without this middleman, it's like everybody is talking about it as we speak. Elon Musk basically bought Twitter, right? And thank God, because finally someone who will guarantee the true freedom of speech on that platform, on Twitter. But I mean, before Elon Musk, Twitter was like banning some people from its platform because they said things that are not in line with their policy, basically.
Sure.
So as long as Elon Musk is the owner of Twitter, everything is great. But what happens when Elon Musk sells it to someone else, or who knows? Like, what guarantee do we have that Twitter will guarantee the freedom of speech? But with something like a blockchain technology, some kind of equivalent service like Twitter provided by a blockchain technology, we will not have to worry about who is in charge of the service, who is in charge of the network, because we don't need trust. Like, the whole thing is embedded into code, into the technology itself. So it doesn't belong to any central entity to decide who has a say in the network or who doesn't.
Wow, incredible. Yeah. So again, you're right. I never saw it that way, but some people are, unsure whether it's positive or negative. People are saying, what does this mean? And so a lot of it's being swayed on the guy in charge. And so what you're saying is, hey, we can actually get rid of that issue if it's really bothering you. We can leverage it on blockchain with crypto. So that, that kind of leads me into something that I've been wondering is saying, okay, now that we know what it is and we know that you're very knowledgeable guy in this area. What do you see what's the future of it? How does it relate, specifically to this conversation? How does it relate to underlying tokens, and kind of like bring us into that world? Where's the future as far as the technology and the tokens?
Sure. Before diving into that, I'd like to touch a bit on, the market cycles, those 4 years of market cycles, because I'd like to address what I believe is a misconception.
Sure.
Everybody thinks that the peak, like each peak of the market cycle, is driven by the Bitcoin halving. So basically, the Bitcoin halving is that phenomenon where within the Bitcoin network, like the rule of cutting by half the issuance of new Bitcoin tokens is embedded in the code. So basically, every 4 years, the miners that are validating the transactions over the network and producing Bitcoin, they are getting rewarded, but their reward is cut by half every 4 years, basically. And there was this like globally admitted and accepted theory saying that because this supply is cut by half every 4 years, there is a reducing of supply. Therefore, and since the demand is staying the same or maybe increasing a little bit, that's what drives the market up. I'm not saying that it is entirely untrue, but I believe that what actually drives this 4 years market cycle is innovation. When you go back in time, you could like pretty much tie every peak to either NFT craze or DeFi surge or ICO boom or some kind of innovation that makes something new and provide new type of services. And people rush into it because it's new and it brings value. Like DeFi, for instance, you can borrow, you can lend, you can do like sport betting, you can do all kind of things with DeFi. You can issue your own money with DeFi, like your own stable coin. Basically people just rushed into it, which as an effect drove all the prices up. So my point is, it's not only the Bitcoin halving that is impacting the market cycles. Now, back to your question, what is driving innovation? What the future looks like?
Yeah.
It's a very interesting point. It's a very interesting question, because all those few things that I've mentioned earlier, so DeFi or metaverse, NFT, and so on, you need to see them as outputs. Those outputs, those products, basically, those business products, those use cases in a way, they are sustained by technological bricks. And at Karukera Capital, we have leveraged our software and cryptographic expertise to identify 6 fundamental technological bricks. So those 6, So those 6 bricks, like they are the Lego bricks that will make everything possible in the crypto industry, basically.
Sure. So what would you say those technological bricks are? Like right now we're talking about, if I could just chime in. So the misconception is a lot of the value in the crypto market, you're saying, is that value is created from having. And you're saying, well, I mean, yeah, but not really. It influences it. But in your expert opinion, you're saying...
It does play a role, but it's not like the main driver, in my opinion.
Yeah, exactly. You're saying, no, technological innovation and I would argue more importantly, the adoption of that innovation is really what's driving the value more than this halving that's baked into the system. Is that... How am I doing? Yeah, we're getting it right. So that being said, you said, look, in my fund, we've identified 6 areas of innovation. So we're not worried about having, like, we know it influences it, but we're focused more on where the fundamental root cause that's driving value. And you and your fund have broken it down to 6 areas, correct?
Absolutely.
Okay, so why don't you fill us in? Now that we know that really the value in crypto is driven by innovation, now you're saying, look, in these 6 areas, this is where all the value, making billions, and as the topic of the show would suggest,
absolutely,
will come from businesses, services, and investors in these 6 areas. So now that I've dangled the hook, let's get into it. So let's go even deeper. Bring us deeper. What has your fund found are the 6 areas of innovation in crypto?
Sure. So those 6 areas of innovations, they are basically sectors in the crypto industry. So they are type of protocols. So I will start with what's called bridges. So a bridge is like a cross-chain protocol. So, I mean, for your audience to understand, it's important to know that the crypto industry as of today is quite like segmented. It's like many silos. So Ethereum is a silo, Solana is a silo, Cardano is a silo, and so on and so forth.
Right.
And if you want to transact the value of information from one silo to another, like from Ethereum to Solana or vice versa, you need what's called a bridge in between the two of them. So thanks to bridges, we will achieve interoperability. Because as of today, the liquidity is fragmented. The services are being kept in silos. It's hard to truly interact in a seamless way from one crypto ecosystem to another one. So bridges are fundamental. And apart from that, so that will be the first brick.
It's like if I chime in, it reminds me of what. You and I, obviously, we have 2 different native tongues, and Google Translate, you're obviously bilingual, but Google Translate would be one of those bridges to say, hey, if you two need to talk. I remember being in Mexico, and I was trying to talk, and I was looking up different words to communicate with my driver, and through Google Translate, I actually found out this guy was hilarious. And we really had a good time. So bridges are just allowing to say, okay, well, we got one language and one thing going on over here, something similar, but in order to merge those 2, bridges are critical to bring together the different infrastructures and reduce those silos, like you said.
Absolutely, it's a very nice analogy, and the audience can look at ChainX. It's one of the bridges between the Polkadot blockchain and in the Ethereum ecosystem. They can also have a look at REN. It's between Bitcoin and Ethereum. I mean, there are all kinds of, not all kinds, but there are many bridges. Similarly, with any sector, with any brick, I mean, cryptocurrencies, the crypto industry is such a fast-paced industry. You have like new projects coming out every day, basically. This being said, let's move on to oracles. So what are oracles? Oracles are the type of protocols that are bringing off-chain data in the world of on-chain blockchains, but in a safe, decentralized, trustless, and untampered manner. Let's take an example. Let's say that you want to use a DeFi protocol that is allowing you to bet which NBA team will win next week, for instance. So I don't know. You will bet on a New York team, for instance. But like the decentralized DeFi protocol, so the protocol that is managing those bets needs trustworthy information from the outside world, outside from a blockchain point of view. Meaning, they need to get fed. They need to get some kind of data feed from the outside world into the world of the blockchain of the DeFi protocol handling this kind of bet. And this is where oracles come in. They go in our world and they cross-check the data. They make sure that they are not tampered. They net them into some kind of structure and they transfer them on chain, those data. And these are oracles. The most known oracle is called Chainlink. It's one of the biggest market capitalization of all cryptocurrencies. And but you have a few other ones like API3, Band Protocol as well. You might want to look at that API3 and Band Protocol. Happy as well. Happy is one of them, very interesting one, especially that it brings some element of privacy into those transfers. Whereas the other ones, they are only bringing like pseudonymity and not anonymity. There is a subtle difference. Yes. These are oracles.
And we'll put the links for a lot of those in the description below for the listeners who are listening to it. We'll kind of guide you to those areas as well. Okay. So we talked about bridges. We talked about Oracle. And earlier you mentioned in your early example, decentralized storage using those photos. Maybe walk us through that.
Absolutely. Absolutely. That is one of the technological bricks that we have identified, because by those bricks, what do we mean to achieve? What do we want with those bricks is we are saying that those bricks are the required elements to achieve a seamless Web 3.0, as user-friendly and as a seamless and that can deliver on its promises and claims. Decentralized storage is definitely one of them. So as I mentioned earlier, basically it's leveraging the available memory space of any community. I mean, I don't know how many gigs are available out there, but it's billions of gigs that are unused and unleveraged, and out of those we can unlock value from those gigs. I mean, how crazy is that? We could we could just replace iCloud, Google Drive, Dropbox, and so on and so forth. And anyone can do that. Anyone can build a protocol on top of these these bricks, right?
Yeah, I would argue Airbnb built a business off that similar notion to say there's people that have, if you've got excess capacity being underutilized, whether that's like a factory floor, a hotel room, your own house. There's even Elon Musk is saying, hey, if I can get these autonomous cars, they don't even need to sit there. They can go out and drive people around, make you money. It's pretty similar as to say, if you've got an asset and it's not being utilized to its full capacity, why don't we just let someone else utilize it and pay you for it? So this is great. There's it's Uber, Airbnb, now it's going to the blockchain. I mean, this is absolutely fantastic. So that's one of the areas you've identified as value.
Yeah, absolutely. That's one of the areas, and I'm really glad that you bring up the example of companies like Airbnb and Uber, because it's literally about unlocking the value of something that you own. Yeah. It's like cryptocurrencies this is what cryptocurrencies are about. Another similar example will be, and we are kind of drifting off of our original conversation, but very quickly, people can now tokenize their property, their real estate. So instead of having an asset that is just there, and the value of this asset is fluctuating with the real estate market, you can tokenize a part of it or all of it if you want, and sell those tokens and get some liquidity, and use this cash to leverage it and buy more properties and start new projects.
Very cool.
Anyway, I mean, I'm drifting away.
No, it's like a reverse mortgage, but through the blockchain.
Exactly. The possibilities are endless.
Awesome. So what's number 4? What would be the fourth area of innovation where billions are going to be made?
Sure. So number 4 will be what's called in the crypto industry world indexers. So indexers are like search engines. So Google is a search engine, for instance. So the role of a search engine is to get the query of people around the world, go find that data that is being queried, and to retrieve it for whoever is asking for it. And this is done right now as of today with centralized search engines like Google, Microsoft Bing, Yahoo, and so on. But it's necessary to have the same capability, but in a decentralized way. And this is where indexers come in. If you look at the Graph, for projects like the Graph, for instance, or Unmarshall or Fura is a very interesting one, a very, very early stage, but very interesting one. They are looking at carrying data on chain in a decentralized and trustless way, so that people can just, the same way they would search online, they would Google something, they would search on chain, they would search on the blockchain, but without using a centralized entity, a centralized service. So that will be the indexer. That will be the fourth technological brick.
Awesome. Number 5?
Yeah. 5 is So 5 is to a lesser extent it's a good a very good technological bricks, because this one we call it the decentralized internet service providers. So providing the internet to the masses as of today requires a lot of infrastructures, like physical infrastructures, like optic fiber,
towers,
cell antenna, satellites, and so on, right? But we have crypto projects leveraging a specific hardware, bespoke software, and a specific type of radio waves, basically. And they are looking at providing internet on a large scale in a decentralized way. So you will not have a single point of failure like we have today. So if your optic fiber goes down, well, you don't have internet, and that's it. And this kind of crypto projects, there is one called Helium. It's the most advanced project. Helium is spelled Helium. They provide basically hotspot, basically they are like modems, like routers that you can dispatch in a town or in a country, and with this type of radio waves, they can provide internet pretty much anywhere, all of it in a decentralized way. And it's really, I mean, it's just when you take all those bricks, I mean, it's so interesting to see how and where the innovation is going, because it's like the internet coming together, but in a decentralized way. So we are reliving again the internet since the 90s, but with the new technologies, and this is like we are at the beginning of the cycle.
Yeah, and there's, if you're old enough to remember that, there's probably a lot of people that have some FOMO about maybe not investing as much as they should have, and when the internet first came out, not understanding the true scope and scale of this, not only the project, but the wealth that's being created there. And that's absolutely incredible. So decentralized internet service providers. And then finally, number 6, the 6th area of innovation that will drive value in the crypto markets.
Yeah, I would say that the sixth one is the most important one, and this is the one that we are heavily investing in, and there is a reason for that. So that one is we call it the brick of layer one protocols, and the reason why they are called layer ones, it's because they are basically you need to see them as some kind of decentralized operating system. So they are like the base software layer upon which every other services, every other decentralized application will be built on. Without those layer ones, without those layer one protocols, you cannot build DeFi, you cannot create NFTs, there is no metaverse, there is no play to earn, move to earn, all those marvelous services and applications that we come up with blockchains. They are all based on layer ones. You cannot do without them. And the interesting part is that, I mean, the reason why we invest heavily in that type of sector in particular, it's because they are the most mature technologically speaking, and they are the safest as well. You know, I was talking about bridges earlier, but I mean, your audience need to know that bridges are great, and with my personal money, I am invested in some bridge protocols, but I wouldn't do that with my investors' money because they are not mature enough, technologically speaking. And you need to know that most of the hacks that have happened in the last month have happened on bridges because they are not technologically mature enough. Lately, was it 2 or 3 months ago, a bridge between Ethereum and Solana called Wormhole got hacked, and they lost $320 million. It is astonishing, right?
Oh my goodness!
Yeah, and this is where our expertise comes in. You know, to see which project is safe, which one is not secured, which one is is on a good innovative trend to invest on the long term, basically.
Right. So you're saying now that out of these 6 areas, some are more mature than others. That's fine. There's very risky stuff. Now, when I'm listening to you, you said, look, number 6, layer 1 protocols. This is what your fund heavily invests in kind of the startup world. And the reason why is, 1, it's more mature, hence less risk for your investors. But more importantly, these are my words, not yours. You're saying that this is something that is absolutely critical to the overall success of crypto, blockchain, everything that you put onto it. We invest in that underlying foundation. So it's similar to when the internet was coming out. Some people were starting internet businesses, while the people who made the real money were investing in the infrastructure of the internet.
Absolutely.
The mass scale of those kinds of projects is astounding. However, since everything relies on that, a lot of attention, a lot of maintenance, in a good way, starts going into this to say, well, what is the critical path to success in the blockchain? And you've identified that the area that your fund focuses on is part of that critical path. Therefore, improving returns, mitigating risks. I'll let you get into that. That's just my perception. Again, legal disclaimer, right? We don't know what we're talking about. Entertainment purposes only. So, so it sounds like, if I could just kind of conclude on those 6 areas, it sounds like those 6 areas that you've identified is where value is being created. But then to complement that, it's the cryptocurrencies, and you've listed a few. It's the cryptocurrencies that are kind of woven into that technology is how value is transferred. Would you say that's a fair conclusion on that?
Yeah.
Okay.
Yeah, basically, yeah, exactly. So those, like, to each project I mentioned, for each category, there is a cryptocurrency, there is a token attached to it. So the value and the growth of the technology and the network is, you know, being transferred to the tokens, because obviously the more a network is used, the more people need tokens to use that particular network. Like I mentioned Chainlink earlier. I mean, you need to have Chainlink tokens to use the Chainlink network and to get that Oracle services. So absolutely, you put it well.
Awesome, thank you. So just finishing on that, you mentioned Chainlink. I'd just love to ask you, you know, who should people explore? We can't say they should invest in. It's not financial advice. But who are some interesting prospects, we'll say, in those 6 areas? Maybe walk us through a few that you think are kind of doing some cool stuff that might be able to, that are value creators in each of these 6 sectors.
Sure. So yeah, I'm going to mention projects because
Sure.
there are a lot of very bright people out there working on projects, and they work as teams. So, for instance, I'm going to start with the layer ones. For instance, I do believe that the type, because again, it's a very complex universe. So I tried to oversimplify it for your audience, but within within each category, there are
That's
like
cool,
subsectors and niches and stuff like that. So in the area of layer ones, I do believe that the niche that will do well in time is what's called app chain types of layer ones. So they're like app specific chains layer ones, and the 2 layer ones that are going towards that direction are Near Protocol and Avalanche. And I guess the link will be in the description of the episode. But yeah, if your audience want to have a look at those, it's very interesting and very promising for the future, because it brings modularity into decentralization, which eventually will reach interoperability that I was talking about with bridges, basically. Yeah, so that was for layer ones. For bridges, for instance, it's hard to answer that question because there are a lot of ecosystems, a lot of different blockchains, and between each of them, you need a bridge, basically. So I'm going to let you imagine the number of bridges necessary to achieve interoperability. This being said, there is one project that I like a lot, which is called Juno, Juno. It's based on the Cosmos ecosystem, and natively they are structured in a way that they are natively interoperable with a lot of existing ecosystems like Ethereum, Harmony, Polkadot, and so on. And it will be very interesting to see how they evolve in time, but I do believe that they have great potential. What else? So decentralized storage, I would say Filecoin is a very interesting project to look at. It gives you a good idea of what is possible to achieve in that type of use case. And you have others like Storj, Siacoin as well. But yeah, Filecoin is like the biggest one, the biggest project.
Sure.
Like in terms of indexes, for instance, the most known protocol is called the Graph. It's very interesting to look at, but there is another one that is coming up, and that is called Fura, like Fura protocol. And I believe that they are going to disrupt the Graph because the Graph is based on Ethereum, and as such, they are kind of limited, structurally speaking, to the Ethereum ecosystem, whereas Fura natively, they structured their software to be interoperable with many of the ecosystems, which by way of effect is the retrieving of data online on chain. Sorry. In terms of decentralized services provider, I would just say go with Helium. Go check Helium. I mean, Helium is they have, like on the Helium website, they have this map of the world where you can see areas that are being already covered by their hardware. So yeah, I mean, it's just go and check that out. It's very interesting to look at. And lately, oracles. Yeah, oracles I've already mentioned. Chainlink, and you could have a look at as well at the Band protocol.
And Happy, I think, was another one you mentioned.
Happy as well. Yeah, Happy. API 3 as well. API 3 is a nice one to look at. Awesome. There are a few like that. Yeah.
Okay. Perfect. So, and you mentioned, I'll put a shameless plug in there for you. So layer 1 protocols, you mentioned everybody else but yourself. So, you guys are definitely, one of those people that are, at least helping those that are doing the projects. You're able to provide the capital, which not only helps to mature the industry, but it also helps your investors to
Absolutely.
make we'll say a few dollars, a few more than that, we'll say. But okay, so
Yeah.
now moving forward, what are some areas, hypothetically speaking, if people here are saying, look, man, this is good. And maybe some of our listeners are developers in this area, but, for people who aren't, but they see the value, they see things that are being created and they want to participate. Let's say, hey, Anthony, that's brilliant. Those 6 areas of innovation, those sound good. What are some areas that you would recommend that some people could make money right now?
Yeah. So how to make money? So, I want to be clear about something. So, you can, with cryptocurrencies, you can make a lot of money very quick, very fast. But you will need to take huge risk, like huge amounts of risk, right?
Yeah.
Like for those of ones who have, who can stomach it, for those of your audience who can stomach it, they can go and do a yield farming in DeFi. They can they can do day trading. They can participate into IDOs and so on.
Yeah.
But it is one way to do it. But
Sure.
It's not what we do with our investors, because we play the long-term game.
Yeah.
We play the very long-term game, and that's why we leverage our scientific and cryptography expertise to go like to the bottom of it. We do like due diligence, research. We stay on top of the trend. We participate into the innovation itself. We have processes to make sure that everything is assembled and there to stand the test of time.
Right.
So it's like, we are opposed, like diametrically opposed to those who are doing impermanent losses on DeFi protocols and stuff like that. Right. One way in like there is like a middle ground where people could just purchase some tokens, like, and I would recommend the layer ones, the layer 1 tokens like Ethereum, Solana, and so on, and just stake them. You have a lot of solutions like BlockFi or Celsius as well, where you could just basically purchase tokens and stake them there, and people would get a yield, regularly on their stake. Yeah, staking.
Okay, so staking. So we went through. So number 1, you mentioned you could just gamble, take risks. Not really what you recommend or what you do.
Like to address that first category of gambling and taking risks. To give further guidance to your audience in case some people want to do that, I would say that the smartest way to do it is to try to get very early into moonshots. So in cryptocurrencies, like each token has its own market capitalization. So obviously, if you buy a token that already has $1 billion of market capitalization, it will be harder to achieve a 10x, 100x, because it means that the market capitalization needs to go from 1 billion to 10 billion to 100 billions, right? Yeah. Which tokens like Ethereum and so on are already towards those levels, but it's hard to achieve. If you want to achieve like 1000x, like crazy multiples, you need to go in very early when the market capitalization is very low, and the best way to achieve that is through ICO and IDO. So ICO stands for initial coin offerings, and IDOs is initial DEX offerings. And in order to achieve that, the latter IDOs, you need to get some tokens from launch pads like TronPad or BSC pad. Every week they have at least one project coming out, and you can purchase the tokens when the market capitalization is very low, like a few hundreds of thousands of dollars, a few millions of dollars for the biggest of them, and those tokens, they will go through the roof very quick. They will just take off very fast. There's a chance that they crash down pretty fast as well,
That's what the risk is, though. Like that's
exactly
not really. Yeah, that's quite the wild ride that people can take on those. So you're saying if you do it, it's the equivalent of just buying penny stocks in the stock market, right?
Absolutely.
Or angel investing. You're like, there's not a lot to go off of it. There is a lot of risk, but you can mitigate that. But it is a risky play. But you can make outsizable returns. Just by buying coins. You said ICOs, IDOs, I would argue NFTs. A lot of those things are kind of the avenue to do it in that way. You also mentioned staking, which you could do through BlockFi, Celsius, Binance. Those are some areas that people can explore as far as staking, which is essentially a high yield savings account for crypto.
Yeah,
you put it in, they do their magic, and they pay you a nice, 4, 5, 7% return on your assets on top of the capital appreciation.
Appreciation,
yeah. And then I would say number 3 is you invest in a fund.
Yeah,
is a fund that who is filled with professionals like yourself. You could invest in a fund and do it through that way. So maybe what are some of the high level things that investing through a fund that you've come to understand running one of your own? What are some of the? Sorry, let me clarify. What are some of those areas that you guys focus on? What are some of the advantages of doing that as well?
Sure. So basically, I mean, obviously, I'm going to say that investing in a fund with a fund is the best way to go because you have like professionals handling your money, managing your money, and your investments, and they do it they do it for a living. So basically, they do it 24/7. There are processes in place. They do research, like very in-depth research. They go like all the way for their due diligence. They have a risk management in place. A very like simple example of risk management that we have in place is for now we do not at Karukera Capital is for now we do not invest in bridges. Why? Because along the past few months, most of the hacks that have happened in the industry have occurred on bridges. So the technology is not mature yet. So we stick to something else, basically, to layer ones for that matter. Okay. Investing with a fund like Karukera Capital, and that's only for accredited investors. Unfortunately, I'd like to have it open to more people, but I mean it's how the regulation is, right?
That's the rules.
What? Sorry?
That's the rules that the SEC gives you. Yeah.
Exactly. So for accredited investors and above, they can just reach out to us and or to other firms for that matter, and they will be sure that everything is being put in place so that their money is invested in the right type of asset at the right time. And by doing this, investing at Karukera Capital in layer ones, in infrastructures, it's a guarantee. It's a sure thing that our investors, are placed in the central position where the most of the upside will be within the crypto industry, while facing a very low, really low amount of risk.
You mitigate the downside while
Absolutely.
still preserving that impressive upside.
Absolutely.
You mentioned that it helps your investors to get positioned in that way, but it also has professional oversight. Sounds like there's some risk management components. I'm assuming that exists in most funds.
Well, risk management is key.
Security. There's a lot of things that go, and the savvy investors like yourself understand that to say, well, it's not enough just to buy a coin. You gotta know which coin and what's the right timing and where is the market going and then there's the financial accounting and security and there's a lot. So there's a lot of stuff that's involved with playing, as you put it, the long-term game. And obviously you can't guarantee any kind of returns. Obviously any investment would have risk, as you described here. So given that you're, we'll call it KC, Karukera Capital, thank you.
Yeah.
Focus on research, long-term gains, and risk management.
Absolutely.
Would that be a fair summary?
Yeah, it would be a fair summary. Absolutely, it would be a fair summary.
So finishing, we've had a great conversation around the areas that are driving innovation. You're saying don't worry about the coins. It's really, coin is how you transfer value. But the value that's created is the projects. You went through the 6 areas of innovation. Now, how can people get a hold of you? Obviously, that's okay because you're a 506c, I believe, which means you can market.
Absolutely.
Yeah. So how can people get a hold of you? Maybe we just put your contact information description below.
Sure.
If they want to learn more or just get to know you, you're a fun guy. So.
Sure. So they can go into the description. They will see my contacts. Other than that, they can go on LinkedIn. If they type Anthony Calpas,
Calpas is
absolutely yes. Calpas.
Yeah.
They should find me quite easily, or on Twitter as well. Anthony Calpas, like all attached, one word. On both LinkedIn and Twitter.
Okay. And so, as we're wrapping things up, maybe is there any final thoughts that you would want to share?
Yeah, sure. We've covered a lot, and I hope that your listeners got value from what we shared here. Basically, the main point is investing in tokens is not like investing in stocks or in equity. Basically, when you have a token, you own a piece of a network and you have access to the services that this network is delivering. So having that in mind, it's important to identify which kind of protocol or network or project will stand the test of time and will deliver value on the long run, right? This being said, I hope that your listeners keep this in mind, and yes, they are very lucky to have you, Ryan, because I don't know if your audience is aware of it, but we've worked together. And you're definitely the kind of guy that people should stay close to, because having worked with you, I know that you're the kind of guy who wants to bring people up, to lift people around you upward, right? So your community and your listeners are really lucky to have you.
Thank you, and likewise, you're very kind, and yes, that is one of my life goals is to. I've been very fortunate, but this knowledge and these skills, as you and I've gotten to know each other, I firmly believe you never really truly own something until you give it away. That's and that includes my knowledge and skills and yours. Mm-hmm. Is to say, if I'm truly going to become a master, can I really claim that I've owned something until I've been able to give that away? And so, wonderful people like yourself and who are joining on this mission to help people to find the way, light that torch and be the torchbearer. I really appreciate all that you've done as well. So, well, that's enough for me, everybody. So to summarize what we've talked about, pay attention to those 6 areas, go back, write those down if you need to. That's where value is being created. And also, join us on our mission. Give some of your skills away. Be very generous in your mission, and you too will have the skills you need in your pursuit of making billions.
Wow, what a show. I hope you enjoyed this episode as much as I did. Now, if you haven't done so already, be sure to leave a comment and review on new ideas and guests you want me to bring on for future episodes. Plus, why don't you head over to YouTube and see extra takes while you get to know our guests even better. And make sure to come back for our next episode where we dive even deeper into the people, the process, and the perspectives of both investors and founders. Until then, my friends, stay hungry, focus on your goals, and keep grinding towards your dream of making billions.